Hey, crypto friends. Now, when we are talking about reversals in the crypto market, they might look totally random, but they are definitely not. And there's a simple trick hidden inside of every single basic trading indicator that reveals when the market is overheated and is close to a potential reversal in the opposite direction. And I'm going to be showing you guys how to spot these potential reversal points on all of the basic indicators and the candlesticks themselves as well. Now, for those of you who love trading crypto and would like to try out the same crypto exchange that I use on a daily basis, feel free to go ahead and try out the Blowfin exchange here with the link in the video description down below this video. I personally love this exchange because they allow anybody from anywhere to be able to sign up and trade crypto futures. All right, guys, so the very first indicator that we are going to be looking at here today is going to be the RSI. All right, so here we've got the RSI open, and as you guys can clearly tell, we've got the squiggly lines, going from top to bottom. So basically, what the RSI is the top. How you can tell that things are overbought or oversold is by looking at the top two line, or the top line and the bottom line. The bottom line measures at a length of 30, and the top line measures at a length of 70. All right, so when price action reaches, when the RSI reaches at the 70 levels or above or higher, it typically signals that the market is, or that the price is currently overbought. And the same thing when it's down below the 30 level or at the 30 level, it means that things are typically oversold. All right, so basically, when price starts to reach these levels, it technically means that things are starting to get overbought. Now, it doesn't mean that it's going to start reversing right away, right when it gets to the top. It just means that things are starting to get overbought, and a reversal could be coming soon. Because there's a lot of times where the RSI will be overbought for an extended period of time or oversold for an extended period of time, and that's totally normal. All right. The key thing to watch here is to watch for bullish and bearish divergences. And I've got a bearish divergence here to show you real quick, just to kind of show you how you can look for these. All right, so as you guys can clearly tell, I've got an arrow pointing up here and an arrow pointing up here and an arrow pointing down here and an arrow pointing down here. Now, the upward pointing arrows are basically showing the beginning and end of this line right up in here. All right, now this line is showing that price action is continuing to move upwards. All right, it's continuing to move upwards, but it's moving upwards with very weakened momentum. All right, and you can tell that by looking at the RSI below, because the RSI is creating what's called a bearish divergence. All right, it is when price is moving upwards, but the RSI is starting to move downwards. That tells us that momentum is weakening, and we can expect a move to the downside to be happening very, very soon. All right. So as you guys can clearly tell, you can find these bearish divergences by simply connecting a line from the very tippy top point of where the RSI kind of peaked and to where the most recent high peak is, in correlation to where the price is, the price started to take a downfall. And you can clearly see that right in here. All right, RSI is moving downwards and the price action is still continuing to move upwards. So that tells you right there that, obviously momentum is weakening and price is expected to possibly drop from there. And as you guys can clearly see, that is exactly what happened right here. We had this big downtrend shortly after this bearish divergence was found. All right, so that is how you can go ahead and find potential reversals using the RSI indicator. So now the next indicator we're going to go ahead and take a look at is going to be the Bollinger Bands. All right, so let's go ahead and take a look at the Bollinger Bands. Now, these are kind of fun. I used to use the Bollinger Bands a lot back in the day. I don't use them very much anymore, simply because that's just not my trading strategy. But Bollinger Bands, they work very, very well. All right. And for some people, that's all they use, all right? And there's nothing wrong with that. So with Bollinger Bands, the way that you can tell that things are overbought is simply if price action, the candles themselves, are pushing above the top line right up in here, all right? That is going to tell you that things are extremely overbought or starting to get overbought, and there is a potential reversal coming soon. Now, when we start to move sideways like this inside of the moving average in the center, and the top band, that is telling us that momentum is starting to weaken, all right? Now, when it goes straight across like this and hits the moving average and hits it and starts going below it, then that's when the downtrend is going to end up starting. And that's, you can clearly see that right here happening clear as day, all right? Because we moved straight downward right after that, all right? So you can kind of use the lines as a guide to tell you if things are overbought or oversold, all right? Now, as you guys can clearly see here with the Bollinger Bands, another way to tell is if, obviously, if price action is above the center moving average or below the center moving average, all right? Obviously, if price is above the center moving average, things are going to continue to be bullish. If things are below the center moving average, things are going to continue to be bearish, all right? So, that is how you can tell if things are overbought or oversold with the Bollinger Bands, okay? All right, so now that we've got the Bollinger Bands out of the way, let's go ahead and move on to the third indicator, which is going to be the MACD indicator, because that is another very, very popular indicator here, all right? So the way that you can tell that things are overbought with the MACD indicator is by looking at two things, all right? The first thing to look at is the histogram. The histogram are these red and green bars that you see right in here, and the second thing to look at is going to be the MACD line and the signal line right in here as well, all right? Now, when these two lines, these kind of work in tandem with the histogram, all right? So when things are extremely bullish, as you can see in this uptrend right in here, when things are extremely bullish, you're going to be seeing dark green bars here in the histogram, all right? And you're also going to see the MACD line and the signal line continuing to widen and get larger as it goes up, all right? Now, when these two signal lines start to kind of curve over and you start to see these, here, hang on, let me grab my brush, and you start to see the lighter colored bars in the histogram, and they're not dark green and they're kind of more of a light green, that is telling you that momentum is starting to weaken and a potential reversal to the downside or the upside, if it's, you know, if we're looking at the red bars instead, is going to be happening very, very soon. And as you guys can clearly see right here, when the MACD line and signal line started to contract and get smaller, along with the histogram bars starting to get shorter and shorter in size, that tells us right there that bullish momentum is weakening and we can expect a downside move to happen very soon. And as you guys can clearly see right in here, we had a MACD cross right here on the signal line and MACD line, and the bars started to turn red, and right there, that is our downward reversal that we are talking about here, all right? So that is how you can trade these types of reversals. All right, so now that we have got the MACD out of the way, the next thing we're going to move on to is what I personally day trade with on a regular basis, on a daily basis, is going to be the 7-period EMA, all right? So the way that I use the EMA to spot potential reversals is, the first way is by looking at the deviations, how far away the deviation is from the moving average, all right? So if we are looking here at the 1-hour chart, you can clearly see price action. When things are bullish, obviously price action is on top of the moving average. When things are bearish, everything is on the bottom of the moving average right here, all right? Now, when we get far away deviations from the moving average, for instance, right up in here, we had a very far deviation away from the moving average, and by deviation I mean there is a large distance between the price action or the candle itself to the moving average itself. That is a very far deviation. When that happens, 9 times out of 10, the price is going to want to come back and retest that moving average once again, and that is exactly what happened here, all right? We came back down to the moving average, and we kind of stuck around here for a while. Now, we ended up going back up again, but price action didn't go above this candle right here, and bears pushed it back down once again, and you can tell that by looking at this next candlestick right here, which is an indecision candle. It's a spinning top candle, and we ended up coming back down once again right there. So that right there tells you, based on the deviation being way up here and far away from the moving average once again, that tells you right there that obviously, you know, since it happened a second time within this same little area right here, that we're probably going to end up moving to the downside very, very soon. And that's exactly what happened right here. Now, when we look at it going in the other direction to the upside, you can see it clear as day right there as well. All right. So obviously right here, for instance, you know, price action ended up coming down. It ended up moving far away from the moving average. And as you guys can clearly see, the price ended up going back up to retest the moving average before ended up coming back down all the way back down again. Now we ended up coming down super far again, right down in here. And we ended up going back up to retest the moving average once again. All right, so that is kind of how you can tell if things are overbought or oversold with a short-term moving average. All right, so now that we have got that out of the way, we are going to go ahead and move on to price action itself for the people out there who love to trade with naked charts. All right, so as far as potential, I kind of already talked about this, but as far as finding potential reversal points, what I like to personally look for is candlestick patterns. All right. So if price action has deviated super far downwards and we are waiting for a potential reversal back to the upside, we want to be looking for these very, very popular bullish candlestick patterns. So we're going to be looking for hammer candles, which are these green ones right here, inverted hammer candles, which are these green ones here, the doji candle, which is right here, or a bullish spinning top candle right here. All right. So just to show you an example here real quick, let's go ahead and look for some of these. So as you guys can clearly tell right in here, we had this candle right in here at the bottom of this downtrend, which would have been a bullish spinning top candle. And then the next candle ended up opening up and going upwards, and it continued to go upwards from there. All right. So you can see that with that spinning top right there. Let's see here. You can see it with this spinning top right here as well. All right. This is another spinning top candle. We had a major downtrend, or we had a very big downtrend, and then we had our spinning top candle happen right in here. Now, these spinning top candles, they mean that there is indecision in the market. It means bearish momentum or bullish momentum has started to get weak, and bulls and bears don't know what to do. But what ultimately ended up happening was bulls ended up taking over and going back to the upside, and that was because of this indecision candle that happened right in here. All right. Now, moving to the downside, you can see that clear as day, like I was talking about right here, for instance. We started to see these spinning top candles up here. Again, that tells us that bulls and bears don't know what to do next, and therefore we don't know if it's going to continue to go upwards or continue to go downwards. All right, now since we were at the top of a very steep uptrend way up here, obviously the move is probably going to be to the downside, which is exactly what ended up happening here. All right. Now it's the same concept as right in here as well. Okay. We had three indecision candles, spinning top candles happen right in here, right in a row. Now, that tells us that obviously, you know, price is probably going to move to the downside because there is, between those three candles, there was clearly not enough momentum, and you can tell just by looking at the wicks. You can see just by looking at these wicks right here that there was not enough momentum for bulls to continue moving higher and higher up. And you can tell that by just by looking at the wicks themselves. Each preceding wick got lower and lower and lower in kind of like a step-by-step fashion, and you can see that right in there. And that right there tells you that the momentum has overall weakened, and we're probably going to end up moving to the downside. So even if you entered a short position right in here and price ended up going up right here, yeah, you might have gotten a little bit scared, but realistically overall, price ended up going all the way down shortly after that. All right. So that is how you can overall go ahead and tell if price action, or, you know, if there's going to be a potential reversal coming soon based on the candlesticks themselves. Just to give you another quick example, here's another bearish spinning top right here. We had you know, multiple candles in a row to the upside, and then we had a bearish spinning top candle. Boom, you'd want to enter your short trade right in there, and you would have profited quite a bit going to the downside right there. All right. Overall here, guys, there are literally all kinds of different ways to spot potential reversals with just about every single indicator that exists out there. And I only just scratched the surface here. However, if you are like me and you just like to stick with the basics, then the information that I gave you in this video should greatly help you to be able to identify some very, very good potential reversal points. Whether you're looking for a level to exit at on your long-term hodl positions, or you're just simply day trading the crypto market. So guys, before I go ahead and wrap up this video, if you enjoyed this one and you feel like you got some decent value out of it, please be sure to go ahead and subscribe to the channel. Hit the like button below the video to help me out, and drop me a comment below about something that you personally loved about this video. And with that said, for those of you guys who stuck around and watched this video throughout the whole thing, thank you guys very much. I appreciate all of you.